Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I will discuss some potential overseas posting examination questions and the corresponding sample answers for bankers. Today marks part 18 of my Path Through the Corner Office series for posting examination, for overseas posting examination questions and the corresponding sample answers for bankers. FCNRB deposits can only be opened as option A savings bank account or recurring deposit accounts, B current accounts or term deposit accounts, C term deposit accounts only DBD, MIC, QIC, FDR, savings or current or RD forms are not permitted, D any combination of savings, current or term deposit at the depositor's choice. The answer is option C term deposit accounts only DBD, MIC, QIC, FDR, savings or current or RD forms are not permitted. The minimum maturity for FCNRB deposits in is 1 year and the maximum is A 3 years, B 10 years, C 7 years, D 5 years. The answer is option D 5 years. For FCNRB deposits of more than 12 months, interest is compounded option A monthly, B quarterly, C annually, D half yearly on every block of 180 days. The answer is option D half yearly on every block of 180 days. For FCNRB deposits, 1 year is computed on the basis of 365 or 360 days. For determining the period for interest is paid on the basis of option A 365 days per year, B 360 days per year, C actual number of calendar years in the relevant month, D 364 days per year, 52 weeks. The answer is option B 360 days per year. On premature withdrawal of an FCNRB deposit within the minimum maturity period of 12 months, A interest at savings bank rate for actual days is paid. B no interest is payable. C interest at 1% below the contracted rate is paid. C D interest is paid at half the contracted rate. The answer is option B no interest is payable. The designated link for branch FCNRB scheme through which all FCNRB deposits are routed via control accounts is option A Mumbai Overseas Branch, B Treasury Branch, Bandra Kurla Complex, C Mumbai NRI Branch, D New Delhi NRI Branch. The answer is option C Mumbai NRI Branch. When an NRI returns to India permanently, their FCNRB deposit option A must be compulsorily encashed on the date of return at the prevailing market rate. B may continue to maturity at the contracted rate if desired, but for all other purposes is treated as a resident deposit from the date of return, converted into resident rupee or RFC account on maturity at the account holder's option. C must be transferred to an NRI account within 30 days of return to India. D is automatically renewed as a domestic fixed deposit at the RBI prescribed rate. The answer is option B. May continue to maturity if the contracted rate if desired, but for all other purposes is treated as a resident deposit from the date of return, converted into resident rupee or RFC account on maturity at the account holder's option. Which of the following is a prohibited transaction under FCNRB scheme? A. Accepting deposits in USD, GBP, EUR, JPY, CAD, and CAD and AUD. B. Permitting inland movement of funds free of inland exchange or commission. C. Accepting deposits for more than 5 years or paying brokerage or commission for mobilizing deposits. D. Allowing premature withdrawal of deposits after 12 months with a penalty. The answer is option C. Accepting deposits for more than 5 years or paying brokerage commission for mobilizing deposits. The minimum balance required in a resident foreign currency RFC savings account is option A USD 5000 and GBP 2500, B USD 1000 and GBP 1000, C USD 2500 and GBP 1500, D USD 500 and GBP 500. The answer is option B USD 1000 and GBP 1000. RFC accounts are currently accepted by the bank only in which currencies? Option A USD, GBP, EUR, JPY, CAD and AUD. B USD and EUR only. C USD and GBP only. D USD, GBP and EUR only. The answer is option C USD and GBP only. Loans against RFC deposits, rupee loans can be sanctioned up to what percentage of the principal plus accrued interest with a maximum of rupees 25 lakhs? Option A 50%, B 90%, C 85%, D 75%. The answer is option D 75%. During the not ordinarily resident status of the returning NRI holding an RFC account, TDS applicability is option A TDS deducted at 10%, B TDS deducted at 20% as per NRO accounts, C no TDS is applicable, D TDS is deducted at the applicable resident rate. The answer is option C no TDS is applicable. The EEFC exchange earners foreign currency account can be maintained only in the form of option A savings bank deposit, savings banks account, savings bank account free of minimum balance, B term deposit account earning interest at LIBOR, C non-interest bearing current account only, no credit facility can be made available against EEFC balances, D any combination of current or savings account at the holder's choice. The answer is option C non-interest bearing current account only, no credit facility can be made available against EEFC balances. The minimum amount for crediting an EEFC account from inward clean remittances is option A USD 500, EUR 500, GBP 500, B USD 5000, EUR 5000, GBP 5000, D C USD 1000, EUR 1000 and GBP 1000, D no minimum prescribed for any form of credit to EEFC accounts. The answer is option C USD 1000, EUR 1000, GBP 1000. Amounts can be withdrawn from an EEFC account in Indian rupees. A can be reconverted into foreign currency and recredited into the EEFC account within 7 days. B are not eligible for conversion into foreign currency and recredit to the account. D can be recredited only with RBI's prior approval. D can be recredited if supported by a fresh underlying export transaction. The answer is option B are not eligible for conversion into foreign currency and recredit into the account. Banks may permit their overseas branches or correspondents temporary overdrawing in Vostro rupee accounts not exceeding how much in aggregate? A rupees 100 lakhs, B rupees 1000 lakhs, C rupees 500 lakhs, D rupees 250 lakhs. The answer is option C rupees 500 lakhs. Offering two-way quotes for Indian rupees to overseas branches and correspondents by authorized dealers is option A permitted up to USD 10 million notional value, B permitted only for designated market making banks, C strictly prohibited rates quoted also should also never be better than prevailing market rates, D. Permitted during RBI designated market hours only. The answer is option C. Strictly prohibited rates quoted should also never be better than prevailing market rates. So special rupee Vostro account SRVA for international trade settlement in INR under RBI's APDIR series circular number 10 dated 11th July 2022 can only be opened at A at any AD category A branch after RBI's approval, B Treasury branch Bandra Kurla complex only, C Mumbai overseas branch only with prior approval of RBI, D any branch designated by the respective zonal office. The answer is option C Mumbai overseas branch only with prior approval of RBI. Which of the following is a criterion that disqualifies a correspondent bank from opening a special rupee Vostro account? A. A bank is located in a country with which India has no trade agreement. B. The correspondent bank being subject to sanctions imposed by OFAC, EU, UN, etc., or appearing on the FATF high risk and non cooperative jurisdiction list. C. The bank having fewer than 3 years of audited financial statements available. D. The bank's country not being a member of the WTO. The answer is option B, the correspondent bank being subject to sanctions imposed by OFAC, EU, UN, etc., or appearing on the FATF high risk and non cooperative jurisdiction list. The funding of offshore accounts, forward purchase or sale of foreign currencies against rupees is option A permitted up to USD 25 million notional per transaction, B permitted only for settlement of import trade transactions, C prohibited only spot or cash purchases of permitted currency from overseas branches and correspondents at ongoing market rates are allowed, D permitted with the prior written concurrence of the Chief General Manager RBI. The answer is option C prohibited only cash or spot purchases of permitted currency from overseas branching and correspondents at ongoing market rates are allowed. Overseas corporate bodies (OCBs) are defined as bodies predominantly owned by individuals of Indian nationality or origin resident outside India to the extent of at least what percentage? A 75%, B 51%, C 60%, D 40%. The answer is C 60%. A foreign citizen not being a citizen of Pakistan or Bangladesh is deemed to be a person of Indian origin for for the purpose of opening bank accounts if A. He or she has lived in India for at least 5 years cumulatively, B. He or she at any time held an Indian passport, or he or his parents or grandparents was aware or citizen of India, or the person belonged to a territory that became a part of India after 15th August 1947. C. He or she has an OCI, Overseas Citizen of India card issued after 2005. D. He or she is married to an Indian citizen irrespective of own origin. The answer is option B. He or she at any time held an Indian passport, or he or his parents or grandparents was aware a citizen of India, or the person belonged to a territory that became part of India after 15th August 1947. Indian students studying abroad can be treated as NRIs and are eligible for NRI facilities if they stay abroad for more than how many days in the preceding financial year and intend to stay for an uncertain period. Option A 120 days, B 240 days, C 182 days, D 270 days. The answer is option C 182 days. For the purpose of investments in immovable properties in India, which category of foreign citizens is not considered a person of Indian origin, even if they satisfy the definition of bank accounts? Option A citizens of Japan and South Korea, B citizens of Pakistan, Bangladesh, Afghanistan, Bhutan, China, Iran, Sri Lanka, or Nepal, C citizens of all ESEAN countries, D citizens of the European Union. The answer is option B, citizens of Pakistan, Bangladesh, Afghanistan, Bhutan, China, Iran, Sri Lanka, or Nepal. Under the SNRR Special Non-Resident Rupee Account Framework, which of the following purposes was recently added to expand the scope of SNRR accounts? A. Investment in India's stock markets by FPIs. B. External commercial borrowings in INR, trade credits in INR, trade invoicing in INR, and IFSC unit business-related transactions. C. Opening of escrow accounts for cross-border M&A transactions. D. Holding of rupee-denominated masala bond proceeds. The answer is option B, external commercial borrowings in INR, trade credits in INR, trade invoicing in INR, and IFSC unit business related transactions. The R returns are submitted in the system called FETERS. What does FETERS stand for? A. Foreign exchange transactions electronic reporting system. B. Foreign exchange transaction evaluation and reconciliation system. C. Electronic tracking and earnings reporting system. D. Financial exchange transaction execution and reporting system. The answer is option A, foreign exchange transactions electronic reporting system. Which of the following correctly describes the theta limit in options risk management? A measures how much an options price changes for for a unit change in the price of the underlying. B measures how much delta changes for a unit in the price of the underlying. C measures how much an options price changes in response to the changes in the options time to expiration. D measures how much an options price changes for a unit change in interest rates. The answer is option C, measures how much an option's price changes in response to changes in the option's time to expiration. The three main approaches to calculating value at risk PAR are option A, market to market, mark to market, mark to model, and stress testing. B, correlation, variance, and covariance method, historical simulation, and Monte Carlo simulation. C, duration analysis, convexity adjustment, and gap analysis. D, credit scoring, probability of default, and loss given default. The answer is option B, correlation and covariance method, historical simulation, and Monte Carlo simulation. The next question is a bank's mid office which was hyped off from the back office of for better controls reports to option A the chief dealer or the head of treasury, B the internal audit department, C the risk management department, D the CFO or head of finance. The answer is option C the risk management department. Under DTAA double taxation avoidance agreement, the TDS rate on interest in NRO accounts for US residents as per the table applicable is option A 10%, B 12.50%, C 20%, D 15%. The answer is option D 15%. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.